learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it. Working to the
All right, ladies and gentlemen, I got your watch list coming in on March 3rd, 2020, and the stock market is going to go crazy this week, if not be historic. It has already been historic. It's been 6 days of a row of at least 900-point moves every single day, but this was the largest single point up day in history. Again, we're looking at only points, but this is bringing up a lot of stuff. Yes, Robinhood went down today. We need to talk about that, but I also have the play of the month for you. Yes. So we have a lot to talk about. This move was insane. Today was insane. There was a lot of confusion. It was very interesting. We saw some subtle kitchen sinks I want to talk about. And again, the Robinhood issue was just the cherry on top of all of it. Even halfway through the day, I refrained from trading because I love you guys and I don't want you to get so much FOMO. I am excited though. There is a lot of opportunity there. Remember, there is no bulls or bears. There is only the Colt, baby. So I'm really excited. I hope you guys are ready. So I have a bunch of stuff to go over for you guys. I got the play of the month, a secondary play. I want to talk about the keys. There's a lot of economic events coming out this week and just overall talk about that. Even some of the theories, some say it's confirmed or not with Robinhood, but I will tell you now, they sent an email after hours. It is still not up. So this problem has not been resolved yet. However, a lot of people on the chat went crazy. Back and forth, go to status.robinhood.com. This is going to be the real barometer of when they go up. So monitor that. So let us not waste any time. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. You can watch all of this live. YouTube.com/the stock market. Come during market hours from the first bell to the last bell. We are going to be there. All we ask is that you are positive and respectful. And really, this is my biggest shout out, man. If you guys have held it down, it means a lot to me. So thank you guys for keeping it positive and respectful. Thank you for keeping it on topic. You guys are what makes this great. So thank you, thank you, thank you. And I'm asking you to continue to help me out here by keeping it on topic, you guys. We got to get to the mission. There is a lot of opportunity here. So please hold it down. The chat is there for sourcing information and making it relevant. So I love you all. So really, really at the bottom of my heart, thank you. And hopefully if you're new, we see you there. And do not be too shy or intimidated to ask anything. We've been seeing a lot of growth. We had 6,000 people there today, but do not worry. Once the people who really aren't dedicated weed themselves out, we got that quantitative tightening. It will be good. So let's get right into it. And don't forget too, the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, remixes? What are your ideas? Again, if you were locked out, you got to have a play idea somehow. So post it below, baby. But let's get right into this. Today was a show of support. We've been talking about this with the Fed. There's a couple things, but this was close to throwing the kitchen sink. You had Japan overnight. That's why the futures went up. Then we came down. We were red for a little bit. All in all, from the futures drop to the top today was an 1,850 point move, not to mention a close up above of roughly 1,300 points. So this was wild, but the fact was you had the G7, you had the World Bank, IMF. They were saying stuff about supporting it. Japan came in. Japan bought a bunch of ETFs and stocks. We even got an extra thing from Mnuchin. They were even talking about that emergency rate cut. So I was saying that. I even said that yesterday. I said 2 weeks is not too long to wait, but with things going on, they even said that. Trump hinted at the Fed even needing to work on stimulus. And now with this Robinhood event, here are the theories with it. And it kind of relates because my theory was that this, whatever glitch it was caused, you could even see it. We looked at a lot of the option chains, and if anybody has more experience with this or any updates, please post it below. But based on what I know, I'm very familiar, Google, see, it says 25,000 options. This was about 10,000 options all day, really for the first 2 or 3 hours of the day. A lot of really active companies were barely trading contracts. And my theory is one of the exchanges went down, I think, and this is really what I'll say, if we don't hear it today what happened, we're going to hear about it in a month or 2 months from now. Meaning we may not know it's there. Could have been the government showing support. and supporting the markets. Yes, there's no rule against that. We talked about that. But what my theory is coming down to is that some of the options exchanges weren't fully trading, and we saw a lot of, or a lack thereof, of activity, and this influenced stock prices. But whether they tapered the brokerages or not, you could get real tinfoily. At the end of the day, from the news of what we saw to all these comments, this was a show of support. This was just as close to getting to the kitchen sink. So now the next thing moving forward, this week is going to be historic. It's both the moves that is created off of last week and now today. This is what you want as an option trader, ladies and gentlemen. So how this stuff works with any sort of politics or any sort of nature, you could go all the way back from Bretton Woods in the 1970s to now, to even France, World War II, all the way down to what we saw with China from 2016 to 2019. It's even what you saw with Shanghai, with what they do. They're going to put stimulus, they're going to throw something out there. Japan is notorious for this. You see how that works, and then if that ends up failing, or the next wave hits and it brings us back from what dropped us down, then you're going to need a reaction. So pretty much how it works is there's a wound, they put a Band-Aid on it, or they show that they're going to support it, prop it up, make sure it doesn't fall, and that is good. I'm not saying that negatively. Honestly, as a long-term investor, this is the point they're trying to get across, and I could appreciate it. When you see these governments come in like this, it's showing support for markets, and it's kind of easing investors' concerns that they're not going to let something too external bring down the markets. But again, it goes both ways depending how you want to look at it. But the key here is preserving investor confidence. But again, even how Bretton Woods worked, before they even abolished the gold standards or established fixed and floated currencies, they tried many things, but they try something, it buys you anywhere from 1 month to even 2 years, and if that doesn't work out, then you got to try something else. So what they did today was interesting, but now we need to watch out for the Fed, and now they even hinted at emergency cuts. So watch out for that. Even watch Robinhood. Again, another theory people had, they said that it was because of the leap year and some other systems. I even had, I have rental systems on my rental properties, and some of them went down. I saw a lot of technical difficulties across, different areas and platforms. Some people are blaming the leap year. They say that a lot of people got surprised by February 29th, and that's why, a lot of computers and datas were programming in for March 3rd today instead of tomorrow, and that caused a lot of issues. Maybe it would be. However, now, moving forward this week, you're going to get a bunch of economic events. Trump said he is going to meet up with all the airline and travel CEOs. They're going to talk with them. There's going to be now the G7 and the World Bank. They're going to meet up to discuss a containment plan, and then you're also going to get OPEC, I believe, March 5th or 6th or March 6th or 7th, and they're going to talk about cuts, and there was already even some news about cutting production already, and that may sound counterintuitive with people rushing for supplies and stuff like that, but it's because the second biggest country in the world, China, one of the biggest demands for oil, is really dropped down. Again, that is still in play. So these are all what we have to watch for with now anything that we see technically with one of the biggest brokerages. It's kind of weird that Robinhood is a big brokerage now, but overall, mind-blowing, a lot of stuff, but this is going to be historic again, just overall, even in the sense of all of the moves, just the sheer size and scope of it. This is what we need to determine. Is it going to be a V-shaped recovery, or is it just going to be this Wuhan zone blown up, which I'm kind of expecting and looking for? So either way, it's going to be exciting. Let's pray that all the brokerages go up, and if you are in Robinhood and you're disappointed you can't trade, the best advice I could give, well, actually, none of this advice, I'm just talking to myself, because hopefully you guys don't option trader shilling who can't lose dollar most of financial advice, this whole financial advice, educational purpose only. Thank you. I would just open up another account, try to fund it as soon as possible, and don't pull out the money from one account, close that account, and then try to put another one, because usually there is a delay. Now, some places like TD Ameritrade, they will let you fund and trade on a margin account with an instant deposit. However, any brokerage, if you go to your bank and issue a wire, you could pretty much have those funds instantly accessible. So keep that in mind, but do not panic. Do not move too much. We have to see how this plays out. And one thing I will say, even though this will be a historic week, I really think it's going to be a historic month. And there's a lot of things that it could throw at us. But these size moves, it's going to create opportunities on both sides. So watch out for that and ride the waves. The puts are still expensive and calls are still expensive. In this case, it is not about what. I'm reversing the Buffett line, but it's more so when. If you want to play the bounce or you want to come back in on the puts, this is how they get you. This is how, I've said this before, a bear market or any sort of volatility, it's all fun and games and everyone's smiling when you got puts and it comes straight down. But now, this is where you make or break it, because now puts are still up. Some of them even in cases up 300 to 700% from where they were at a week ago. but now the calls have not appreciated as much and are still in the gutter. We had those calls. You would think after a 1,200 point move, I really want you to keep this in mind. This is a 5% move on the index. That is massive. Our SPY calls are only up 100%. That doesn't make any sense. Again, even if you go in the money and close, they're up 65%, or again, 100% from the bottom. That is nothing. So why is that? It's because the spreads were wide and people were expecting stuff, but this is what you have to think about. Think break evens now, because the price you pay for a contract, remember the option and the market maker, they're telling you what they're pricing in. So now when this bounce happens though, even though the spreads were wide and they had trouble pricing in the calls during the drop in the volatility, as the market's going up, even if it goes up 1,300 points, you reasonably start pricing stuff. They're like, well, it's not going to do 3 of these moves in a week. It can, but that's very unlikely. But now they're saying, well, what are people going to pay? What are we thinking is going to be the break even? So think about that. Even at the money now, the market, even in the midst of all of this, it has to give a break even of where it's kind of pricing and expecting things to go. So even at the money now at 307 with the $13 ask, the market's pricing in now by May a move to 320. That's back to the Wuhan zone. So keep that in mind. Look at the break evens. So that's why I'm saying it's not about just buying a call and then hoping the market bounces up, because even if you just bought a call and it bounces up 5%, you only make 100%. That is not appealing for options. That's not appealing for any insurance, especially considering the risk you're taking. So it's more so now waiting till these kind of level out and then get it at the right time after a few days. Pretty much let the volatility, let it kind of pass through the system. The break evens will start lowering, and that's when once the break evens get lower than expected, that's when we want to take them. So pricing is going to be the name of the game, and hopefully if you guys haven't, we have videos on understanding the market maker. We have a video with standard deviations and understanding what that market maker is pricing in. It's called How I Turned $160 into $1,600 Trading Tesla. We go over all of that, so check it out. And if Robinhood's not working tomorrow, you better have time to go through all of these videos. You better learn the ghetto spread. It's very, very important, ladies and gentlemen. So that's pretty much it. I hope you guys are ready. Be smart. Don't panic. Keep your head in the game. Balance the budgets. Some of you guys are getting thrown into the middle of the Shark Tank tomorrow. Whenever Robinhood opens up, you're going to be down. I need you in the game. Do not panic on it. Again, if you have time, that's good, but this isn't going to be a one-day event. You are going to have time to maneuver. That's why I said I don't even have to trade the rest of the day. I'll trade with you guys and show you. But let us get into the plays. So I'm excited for this. I have your play of the month. It is going to be TLT. It is still expensive, but I'm going to pick up a big position or maybe half of the big position this week unless external forces like the contract pricing, like I'm saying with the timing, if the break evens are still too high, I'm not going to do it, and it might force me to wait. But if anything, I'm going to want to scale in sometimes this week. So it doesn't necessarily mean tomorrow, but I do want to get a little bit more exposure, which is kind of weird considering I still have I don't know what it's at now. Actually, no, I think it's still worth about $4,000. I got $4,000 in those April calls, but I like TLT, and this has to do with the emergency rate cut. Again, one thing we told you guys to watch, and this was a groundbreaking change in my opinion, is that we went from pricing in, look at this. Last week, we were pricing in, even people were thinking no cut. Now the market is 100% guaranteeing a full cut, and this is something to notice. We went up 5%, but that probability didn't change. This is why I'm trying to say, back to the main point, this was a show of support. You guys may not realize it. You could be caught in stuff. This was a clear signal to the market and investors. Read between the lines, my friend. You don't believe me? Believe the biggest market in the world, the bond. But this is why I like it, because this is last time we hit TLT. It's a very similar position. And now if they're talking, Mnuchin said they're going to consider a rate hike, or he said something about emergency rate hike. I think that's crazy if they do it. However, I think what they can do, if they're pricing in now a full half point, something that would make sense and would ease the market, is if they did a quarter point emergency cut, and then 2 weeks later at the meeting they did another quarter point. So then that way it's not a full half point at the meeting, because a full half point at the meeting is very, very big. That's some 2001, 2008 type stuff that you'd expect to see, or that we saw back then. So that being said, that is why I want the TLTs. I'm going to be looking for that. The next play I like is the Netflix April. So I did grab these before I went on the trading hiatus. I was just testing out to see if I could trade, and I was able to. E-Trade worked fine. TOS worked fine. Tasty was a little bit slow in the morning, but ended up getting back to normal for me. I grabbed Netflix April 205s. I brought 5 of these, so I spent about $300. I got them at 60 cents. They ended up coming down here, but not too much. You could see here, and this is why I like it. Imagine I bought these kind of in the gutter today. This contract didn't move, although they were more expensive in the morning. they came down a lot, but they're kind of holding up. Netflix has been a lagger. It still has a lot of IV in it, but they've been lagging this whole time. Everything else has been dropping. I'm not a big fan of these narratives that people watch and stay home and buy this. Maybe it could help, maybe it won't, but I'm still looking for more broader market exposure. So I got some of those plays, and that's not this isn't the play of the month, but this is a good lagger that I like. So I got more of those. I may grab more of them. However, if let's say we do see another rip and these contracts get cheaper, I want to average down in May, because depending on how these things move, these out of the monies with April, that may not be enough time. Again, these are only a month and a half now, so understand a week goes by, 2 weeks, they're really going to start getting crushed by theta, and they're really just going to offer us the opportunity to turn into a graveyard that could come back if there is a big move down. If you really want to profit, we want a little bit more time on there. So that's going to be the secondary play. If I am going to pick up anything, I will get those. Besides that, everything else today, I did pick up those Googles. I grabbed April 17th, and again, I said this all throughout the day, I grabbed these early in the morning because when Robinhood and the option prices and there was zero option volume across the board on a lot of stocks. We were trading in the dark. I said I'll take the risk. I was okay with it. So I grabbed a Google April 17th 960 put. It came down a lot. Oh my gosh. That thing got clapped. I didn't know it was that bad. Oh my goodness. Oh my goodness. Oh my goodness. That was death. I thought it was down to like $4. I was like, okay, it's not too bad. But now they're down 50%. So I might average down on these. But here's the thing. These are far at the money. If anything, we're going to want to average down to anything higher there. You might have to spend a lot of money. If you did get them and you can't afford to average down on them, I would write it out a little bit there, but don't go too crazy. And again, too, if your budget doesn't warrant it, don't go for these big plays, because now if you were just waiting, like we were saying, the patience versus opportunity thing, or opportunity cost versus the actual cost, you spent the opportunity, you could get in on these. So now I like these, but even then, this 960 is only 2 standard deviations, believe it or not, given how Google is being priced in. So keep that in mind. But we got that play, and then I did a SPX straddle, and this is going to be another key one to watch this week. I did a straddle both ways on it, and actually ended up working out very, very well, even though it's still a little high out the money, but even though it's a little bit further out the money. But I did a March 6th, so even though it's SPX, they're very far out the money, but I was like, well, I want to at least give it till Friday, considering what we were seeing today. So I did get a 240.50 put, so way, way far out there, but I got this for $1.60. This is down to 25 to 50 cents, 35 cents. That's pretty much down 70, 80%. But then I also got a 32.15, and I bought that for the same price at $1.60. So I spent $300, 20 both ways. The net gain on that is $235, so about 100% profit. That is doing a strangle, so it was able to benefit us on both sides. So there's that, and then finally, and again, I did these all in the morning in that first hour or two, like I've talked about, and I knew it was a risk, and I took it, but I liked what I was seeing there. I wanted to, chaos, volatility, that is stuff. Sometimes it's worth to take it on, but again, you got to be experienced and be careful. Don't force it, and you're seeing what happened to contract prices. But I averaged down on the CLXs. I got one more, or I got 2 of them. I spent another $100, but I was able to get cheaper. We bought the 130s last time. These came down. I bought these 135s at 50 cents each. I bought 2 of them. So now we are able to take advantage of the Clorox's dropping. And Clorox had a run up with a few other companies, and that was, I think, an opportunity. However, always you guys could wait. And depending on how things change, we could get different contracts. So be careful with these. Again, you could watch how I play it. I know a lot of people are about to get shook up after both tomorrow and today, but this is what volatility is supposed to do. So that's why we always say control the balances, be aware, be ready to go. But as far as everything else, those were the main plays. What I'm going to be looking at tomorrow, watch Apple and Microsoft. These were big leaders. Apple moved $24, and the thing, that's 8%. That's wild. The thing I like about this, though, the March 6ths are going to be good to play, or even, the next weeks. However, this is why I'm saying they're still expensive, because even the contracts we sold out the other day, those are still at the same price we bought them at. That's still a lot of premium, so keep that in mind. But Microsoft and Apple, if these turn, these are definitely leaders here on the market. Again, tech is leading. Those could be good. I'm going to be playing the SPX on any of the short terms. And then now BABA, this one now, remember, we sold out of those other contracts. Those contracts were already not appreciating. Baba's going to be doing something interesting here. I want to see if there's a shift between U.S. markets and China, so I'm going to keep a close eye on Baba. And then Walmart, out of any of the other ones, they went up a lot. Compare them to McDonald's, Home Depot. They were moving like a tech company. So HD, McDonald's, I like those. Even now for credit spreads, what I'm saying with those break evens, some credit spreads might start being appealing. They weren't in the morning, but now that the contracts came up, keep those break even in mind. I'm going to look at them. The next thing I'm going to be watching is all healthcare tomorrow. Tomorrow is Super Tuesday. That's another thing I forgot to mention. So this is the most important day for the Democratic nominees and who's going to pretty much become the front runner. I think we're going to find out by Thursday the results of it, but some lady dropped out today. We saw a boost after she dropped out and what it meant for Biden and all that and what it meant for Bernie. So that was interesting, but watch Cigna, UNH, Anthem. These were all interesting. So I'm going to be watching them. Target has earnings this week. I don't know when, but it's coming up this week, but they already made a premium move. However, we might be able to flip this with volatility. However, I'm going to keep an eye on it. I don't want to force it there, but they could be a move, and they led Costco. Earnings as well coming up, but everybody's been going crazy. I was even just at Costco before I made this video. Water is sold out. People are buying stuff. So if it turns out people don't need it, they just made a lot of money on people panic buying. So they moved up a lot. They're up 10%, but keep an eye out for them. Again, any earnings plays in this environment are kind of a win-win situation. You get to play the IV and you get to play the up and down side. So strangles on those will be good. Watching the video, we have that credit spread, but they were kind of lagging here, and watch the other chip makers, but I'm going to watch them. Depending on how that plays goes on the NVIDIA credit spread, we might have to roll over, but keep your eye there. And then lastly, like I said, SPX is going to kind of be our little beauty here to play during the week if we have to ride everything out, but we want to play anything short term. And then finally, I want Booking. They didn't move today, but with the travel meeting, I think that's going to be interesting. However, I still think Booking's at an interesting place. Again, the fact that you got everything gassing up, they didn't move, but now UAL, even though they closed up not too bad today, only 1%, they were down 5% at one point in the morning. So keep that in mind because that's telling you something, especially how it's moved. So we ghetto spreaded the UAL position, so we're chilling. And then lastly, like I said, watch Anthem and Healthcare. I think those are going to make big moves, but I will be looking at that Booking tomorrow. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watches. Make sure we see you there in the morning. You need to keep your helmet on and stand firm, baby. You do not have time to dwell on the past. There is so many opportunities. I need you guys to take them. I'm telling you on both directions. This is what you asked for as an option trader, but just because there's opportunity, just like maybe you've learned last week, you don't need to move too quick. Let it come to you. Remember what I told you with options. You don't need to be perfect. That is the whole concept of this timing factor where I'm saying it's kind of more so when as opposed to what. So please keep your head in the game. There's a lot of emotions, a lot of psychology. That's all it is at this point. I'm telling you, there's a little bit of underlying fundamentals, but mostly you're going to get psychological moves. So I hope your head is in the game, baby. And I hope I see you there in the morning. Let's go.